Good afternoon, everyone. We will be starting at exactly 4 p.m. Nigerian time. This is just to welcome everyone to this edition of Epic Hour titled Strategies for Accessing Venture Capital Globally. We have a fantastic facilitator with us, Derek Watson, who's the founder N2 Technology. I'm very certain and I'm sure that there is no other individual that is best equipped to sort of take us through this conversation today, as Derek, as a founder, would also introduce N2 Technology and introduce the technology to individuals who are listening on how the technology can be used or leveraged to access venture capital. It's no longer news that Africa has great potentials when it comes to digital innovation, because we have a very young population and we have numerous problems that we need to solve. Technology being one of the fastest and easiest way to solve those problems. In solving those problems, of course, we need to extend the solutions to other parts of the continent. And I'm sure this is one of the reasons why in the last couple of months and from last year, we've been seeing very interesting investment in Nigerian and Africa-founded businesses. So once more, I want to welcome Derek Watson. We're very excited to have you join us. And I'll just hand over to you. It's your show. Thanks, Derek.
Hey, thank you so much for the kind words. And thank you to Passion as well for inviting me. It's a real honor. And thank you to everyone for coming along to listen to me waffle away. I really do hope it brings some great value and that we can work together going forward. I have a presentation just to run through, so I'll put that on there. Hold on one moment. Is that visible? Hello?
Okay. Derek, we currently can't see your screen.
You can't, no? I do apologize. You know what? I'm maybe just going to waffle away, because this doesn't seem to be happening.
Hi, Derek. So you could share the document with me so I share it on your behalf.
But you know what? I think there we go. Does that work for you?
Yes, it does. Thank you, Derek.
Okay, cool. So anyway, I'm going to crack on and introduce myself. So I'm Derek Watson, founder of N2 Technology. And just to give you a little bit of background to where I come from and how I arrived at building N2. I started in financial markets way back in the 90s. I was a trader for a big American bank, which fortunately took me around the world. I worked in Japan, I worked in Switzerland, and then eventually got back to London and started a hedge fund in the late 90s, which took me to Geneva in Switzerland. And through that journey and running that fund and raising capital for it, I got involved with a whole bunch of tech developers that helped us along our journey in building the technology that we needed to automate processes and to find opportunities in public markets. And I worked with a bunch of really smart people that were able to build that technology for us. And that really got me into the early stage tech founders and early stage companies, which was way more interesting than public markets. Meeting interesting people with interesting ideas is always much more interesting. And after the financial crisis, we had invested in quite a few startups at that point. And after the financial crisis, I sold that business and just looked after those early stage companies that I'd been invested in. And essentially the question came along, which, from founders, which was, can you help us raise capital? Now, I'd raised capital in public markets. I'd, been around the block a few times. So I kind of thought I understood everything and said, yeah, of course. That's something that I can do. And then I got into the world of venture capital and early stage investments and realized it was incredibly dirty, incredibly difficult, and really very segregated. I think for 1% of startups, it's relatively easy to raise capital because they went to the right university and they have the right connections through however that Rolodex works. And that seems to be, the story of what we see all the time. And as we've moved forward over, what is it, since the financial crisis, 13 years, everybody's becoming more tech savvy. I think COVID's really brought on the understanding and the need for the use of technology. And obviously with the distribution of mobile phones and a lot of people obviously having access to mobile phones, it seems pretty evident that there's a lot that can be done to make life easier and better. And I guess everybody here is on that journey with a vision to do it. But seemingly there is still a huge gap when it comes to raising capital. And there's great initiatives. Passion is one of them that really helps founders start that journey and build their strategy and go out and start connecting with investors. And I just want to start off with this on the first slide, if you can flick through, just to go through the basic journey of what you need to do and to get that fundraise right. And that one of the biggest points and one of the thing that founders often miss is just to build those foundations correctly. The foundations of setting up your company, the foundations of putting the right people in place, the foundations of making sure that when you actually get in front of an investor, that you don't have conversations about your structure, that you don't have conversations about your legals, your accountancy, your compliance or regulatory needs. You don't want to be having those conversations. So it's incredibly important that you put those foundations in place at the beginning. When you sit down in front of investors, you want to be talking about what you're building, why you're building it, and with passion and with your vision for that product. So this is one of the things that I always tell the different groups that I'm mentoring, and that put that in place. And we're here as a group to help out with that. The second point is really understanding what those pitch decks are about once you get to that stage of actually producing them. We talk about business plans an awful lot, and it's spread around, and I think a lot of people get inundated and confused by the idea of this huge document, this huge business plan that they have to put together, which ties everything up, and it's all the nuts and bolts of the whole business. Honestly, I would say throw that idea away, this sort of old-fashioned view of how you build a business plan. A business plan is incredibly organic. It's the outline of your business, it's the vision of your business, and you've got to step along the way, and it is continually changing. What for me, as an example, I just have bunches of notebooks, because if I write something down, I tend to remember it, but I don't have a hard copy of a business plan that I can sit down and I stick to rigorously every single day and work my way through it. Not at all. It's being a startup founder is all about having the ability to move, be flexible, iterate your business, find your product market fit, and that's why that business plan has to be truly organic. Now, once you got to that stage of a business, obviously you have to go through, you have to find those investors. First stage is obviously your N1, your first connection, your Rolodex, reaching out to those people. We'll speak a little bit more on that going forward. And then, the pitching, these events, and getting term sheets and how to negotiate and close them. We'll speak a little bit more about that. If you could do a flick forward for me, that'd be great.
Hi, Derek. So we're currently trying to access your slide.
Okay, no worries. We spoke a little bit about that. So let's go on, just speak about like the pitch decks and the way we see it and the way we advise our the startups that we work with to do this. There is so much out there when you go onto the World Wide Web of how should I write a pitch deck, what should be in there. There's no real advice on the sort of what pitch deck should be used for what occasion. And it really depends on the audience that you're going to. We've got some examples online that we use, what the Square Capital say, what the Guy Kawasaki say about this. And I think one thing where everybody needs a little bit of clarity is to understand there are, half a dozen, 5 or 6 different pitch decks that you should put in place. There's the incredibly short 1-page or 2-page teaser, which is just to get whet the appetite of investors. There's the live pitch deck, which is essentially when you're standing in front of an audience and you just have big headlines coming up behind you, and you've got to be the center of attention. And those big headlines behind you have to be what the investors, what the audience will have as their takeaway of each of these points. Then you have your short deck, obviously 15 pages, give a good explanation of your business and the traction that you're getting and what you're seeing. Never give away too much in that. You always have to leave investors with some questions that they come back on, and they come back to you on. And then once you can reach the next stage, and you have the long deck. A lot of investors will ask for that at the beginning. I would always suggest that you shouldn't jump straight in and open your books up completely and open your hands up completely on this. And now let's get into the crux of why we're here today. How are you going to access those international investors with your business idea? There's one thing to understand about the investment community, and I hope there aren't too many investors on here because they might be happy with what I'm saying. But the fact of the matter is, it's an investment community where founders always feel slightly uneasy and feel that they are asking. You've got to really understand that the majority of investors have money from investors themselves. They've sat exactly where you are as a founder with their VC business, their thesis of how they're going to invest. And they've sat in front of investors themselves to raise their capital. So they're answerable at the same time. And they are under immense pressure to perform. And if we just, take a sort of reality check on what the VC market actually looks like. I mean, we read all these fantastic headlines about XYZ just raised the Series A, XYZ just IPO'd and it's worth $1 gadillion. Fantastic, it's great. These are really rare instances in the whole marketplace. These are, 1%ers happening all the time. It's the other, VC is a really interesting industry because every VC manager is essentially a loser. He places bets, he gets it wrong 9 out of 10 times. He's waiting for the one to pay for everything else. And that's essentially what their mindset is. Why they always kind of give limited time. That limited time is down to the market being incredibly messy and they're having to look at so many opportunities that don't really suit their books, suit their investment thesis. And on the other side of it, there's the short window to speak with these investors is again because maybe they're just not captivated by the idea. So that's where it's incredibly important when you're putting this pitch together to keep it really simple, keep it really precise about what you're doing, what you're trying to achieve, what that problem is, and how you are the team that is going to actually execute this plan, build it, and make it successful. And captivating the audience in a really short time is an incredibly tricky journey. And one, there is no magic wand that answers that. But if you keep it precise, if you keep it clear, your messaging very clear, then you have the greatest chance of doing that. So just trying to understand the investor's point of view is always good. So you don't have to go cap in hand. I feel that you're begging them for money. Understand that they need to invest as well, and that conversation starts at a much higher level, a more equal level. Obviously, don't cross the barrier into being too show-offy about what you're doing, however good it is. But find that nice balance. Don't be too subservient at the same time. So if we sort of get into how you will go about when you get to that seed stage or that pre-Series A, Series A stage, what are the steps that you need to take to actually reach out and find those investors? As sort of alluded to earlier, the obvious thing is to go to your first connections, whether they be friends and family or whether they be through meetings that you've had, through passion helping you with instructions. But the second level is where it gets incredibly complicated and very difficult. And as we were introduced to, Africa is an incredibly interesting market for a lot of investors. For two reasons. One because it's proving itself to be incredibly tech savvy, and it's got huge coverage, huge mobile coverage, and some of the the mobile apps that are used in different countries are not available there yet. So we're seeing a lot of interest coming through on our side from investors that haven't previously looked into the region. Now coming in, especially as we're seeing some terrific companies. I was recently speaking to some chaps from Flutterware, and their penetration numbers and take-up numbers are just through the roof as we're seeing more and more adoption of different solutions. But how to find those investors, and that's intrinsically difficult. The first thing is making sure, obviously, that the investors that you're reaching out to can actually invest into your region, your country. That's the first thing that you've got to do. And one of the things that we found is most of the data that's available is obviously historical data. So I'm sure everybody knows of the Crunchbases of this world, which are a great resource in so many ways, but highly unreliable because the data is scraped, it's secondhand, it's third party, and for the investor side of it, it's not actually telling you what their current thesis is. It's telling you what their thesis was based on an investment that they did. So, for example, we had a recent success story, we could say, where we were working with Sequoia. Sequoia have never invested in the Middle East, and there was no information anywhere on any of these databases that Sequoia were an investor or could potentially invest in the Middle East. But fortunately, we talked to them and we found out that they were opening up a book so that they could focus on the area. And that first-party data, that first-hand data that N2 runs, is where we feel that we create, a real value to the market by being on top of the investors, making them liable, having their live preferences, keeping up to date, and seeing live deal flow. That's part of the deal that we have with them, that they keep things up to date. So obviously we've got the geographics that you've got to sort out, and you as a founder going out to raise capital, you're entering a world, a full-time job. It's incredibly difficult, as I found when I entered that world. It's an incredibly difficult world, and it's a huge amount of work in terms of just funneling and qualifying the investors out there when you're dealing with secondhand data. But the quick steps would essentially be to take that data, go through it, clean it up, make sure that obviously they can invest into the type of opportunity that you are in the current location where your HQ is based. They can actually invest into your country. Make sure they can they're at the right stage, and this isn't just the right stage in terms of I am Series A. It's also the right stage, which is far more important, of where you are in your product development. A Series A in Japan will look very different to a Series A probably on the West Coast of the US. A Series A in the MENA region will look different to a Series A in London. And I'm sure from the experience that I've seen of deals in Africa, a Series A in Africa looks quite different to a Series A in Europe. It's not really about that. It is, they're just namings of where you are in raising capital. What investors are actually interested in is where you are in that product development. So are you MVP? Are you still at ideation? Are you MVP? Do you have customers? Do you have paying customers? Are you going into scale up? What's your retention like? This is what they're really concentrated on, and really what you need to get across in your deck as well, and any conversation. But when you're qualifying investors, this is what you need to understand. And it's pretty elusive, that information. It's pretty difficult to find. But again, we got to find it. So, industry sector. And then the last one is, which is quite obvious, industry sector is quite an obvious one. They invest into medtech. Voila, you know what they're up to. But the next one, and the really important one, which again is very difficult using secondhand data, but that's really the technology. What domain you're in and what technology you're using. And this is where, coming from public markets, I saw there was a real void in understanding and explanations, and a little bit of sort of some underhand games going on. Now, one of the things we're told and we can read about is, if you're a fintech, then go onto Crunchbase and find out who the fintech investors are. There are very, very few funds that are just solely 100% focused on fintech alone. Their mandate is normally larger than just fintech. Maybe they can do regtech, insurtech in there as well. But it's very rare that you have one specialized fund vehicle that only invests in one vertical in private markets. Now the problem is, and I've done it before, is when I have a fintech product and I go and have a look on Crunchbase and I get all these fintech investors that will invest in the country at that stage. I get very excited. That's great. I feel I'm talking to exactly the right person. It's exactly the company for me. And then you start speaking to them, and you get taken down a long road of them investigating everything that you're doing, only for them to say no at the end of the journey. And the rationale and the reason behind this is because they've probably got 10 or 20 fintechs in their portfolio. They're not going to invest in any more fintech products. They've moved on. You've got secondhand data on one of these data sources telling you that they have invested in 20 fintech solutions, which makes you feel incredibly excited. The fact of the matter is there's a very high probability that they filled up that compartment of their portfolio, and they're not going to invest in any more fintech. The problem is, though, they're going to take you for a nice walk and find out everything that you're doing. Why that? Because they want to take that information, if there's some fantastic ideas in there, and help their portfolio companies. Whether that be right or wrong is kind of irrelevant, a different debate, but that's what they will be doing. And this part is incredibly difficult, just from a data identification funnel to try and understand, and probably the most unhelpful thing I've said, because there is no real way around it as a founder to understand that. And you also have to be pretty strong in your conversations when you first reach out and get on the phone, Zoom, to any of these investors, and not be scared to qualify them yourself. The first question for any investor that's qualified and verified on the N2 platform, the very first question we ask them is, do you have money to invest in new opportunities? And you would be incredibly surprised by how few or how many have told us that they currently don't have any money to invest in new opportunities. They either don't have any money at all because they're fully invested, or they have some dry powder which is reserved for the success stories in their current portfolio, so they can do follow-on rounds, which is just a normal function of how venture capital companies operate. They put more money into the successes, and we've got about 65-70% of all the investors that we speak to that are actually able to invest in new opportunities today. So it's quite a huge cutoff rate, 30% falling over with no money to invest. And if you consider that you'll need to speak to 100 investors to raise, let's just put the number of investors that you need to speak to up substantially to 130, so 30 extra conversations. So I would encourage always founders going on that journey to not be scared, and ask some of those early qualification questions to make sure that you're on the same page, and not just falling into the trap of long conversations and lots of diligence that lead to nothing. The other bit of advice, and I've lived this many times as well, is we all suffer as founders with a syndrome that we like to call at N2 happy ears. Now, VCs are incredibly nice. They want to hear about your idea, and they will, they have to say no so much that in fact at the early stages, they'll always give you a bit of hope. And those happy ears are, I had a great conversation with XYZ investor, and I think he's going to invest. Bear in mind, it's incredibly difficult. Only 0.6% of founders raise from VC. It's a tiny little chance that one can raise from VC. We're finding lots of ways to try and up that and make it better. And there's lots of money coming into the industry, so the chances are getting better. But it is incredibly difficult. So until the check's in the bank, I would say no happy years. That's one of the things, one of the traps I've always fallen into. And intrinsically what it does as a founder, you have these sort of happy years and you're having these great conversations, and you start taking your foot off the accelerator a little bit, and it all slows down, and all of a sudden that runway is getting shorter and shorter, and then the panic sets in. So it's one of those horrible situations to be in, and first time out of the blocks raising capital, it's an easy trap to fall into as well, thinking that actually I'm having great conversations, this is not as difficult as I was told it was going to be. So that's kind of a bit of a summary of the journey you're going to embark on when you get into that capital raising mode. So just as a sort of summary of the different ways that are out there, I'm sure most people are on this call are aware of the different channels and different routes that you can go down. And I'll just try and summarize what they are and what the benefits are, what the pros and cons of some of these are. So obviously, I've touched on a whole bunch of data sites that are out there. That you can obviously go onto, download that data, do that funneling, do that cleaning, do that outreach yourself. There's two ways of doing that. There's the cold outreach and the slightly warmer outreach. We are in the midst of running something that we're calling Blitz Reach, and we've downloaded a lot of data from all these sites, from all the sort of freely available data sites out there, where we're up to about, I think it's about 420,000 different VCs or different investors that we've downloaded from probably 6 or 7 different available sources. And when we cross all of those and start cleaning up that data, it ends up, everybody's scraping from everybody else. So uniquely, there's probably about 78,000, I think we have, different investors that are on these data sites. Fantastic, it's a lot. Now we've started going through and testing all the contact channels that are given within those sites. And it deteriorates incredibly quickly when you start going to the contact and info at emails. The data is really, really, really poor. So what we've been doing is going out. We've been reaching out to all of these so-called investors through all the different channels that are freely available to try and see what those response times are. And it's highly advertised by a lot of investors that their favored way is either you have a warm introduction or you use their online URL form, fill it in, and they'll get back to you. This is really what we wanted to test, because getting a warm introduction is incredibly time consuming. Essentially, you are selling to a middleman your product, and if he likes it, he will then go and sell it to the fund. I'm kind of the opinion you might as well just go to the fund directly and speak to them, rather than having 2 conversations and having someone in the middle that's going to take an extra layer of fees. Getting an introduction is all well and good, but make sure that person actually knows who the end buyer, the end investor actually is. Now the online URL side of things, we've been testing. I think we've done about 2,000 applications now, and they're really quite shoddy. They're really very few people come back. You get a very nice auto response, responder email back from most of them saying we're inundated with opportunities, and if we like yours, we'll get back to you. If you don't hear from us within 28 days, we're not interested. That's the general response. Obviously, there's good players, bad players in every marketplace, but I would say as an overriding average, that's what we're seeing from those online URLs. So I would say they're a little bit of a stay away from, a bit of a waste of time, and you still had to go down the very time-consuming process of qualifying who you're going to send those applications to. Then of course there's the route of using advisors and scouts that can get you in front of people. And like in any marketplace, some are incredibly good and some are incredibly bad. The one bit of advice I would give you on that side, if somebody just wants a 5% fee of anything they raise based purely on success, I'd be very hesitant to use them, because the chances are they are just going to blast it all over the place on the hope that they can make some easy money. And you, at the end of the day, will be doing all the work. The better advisors that are in the market that I've worked with actually charge a retainer, and they become part of your business. They understand your business. They have pretty good industry knowledge on both sides. One is a businessman, so they can help you with the business. Two, in structuring what you're going to be saying to investors, because they've sat on both sides of the fence. And thirdly, they actually have relationships. So I'd always advise the free guys I'm incredibly suspect of, and think they're just going to blast it out all over the place in the hope that someone picks it up. But there are some quality advisors that will charge a retainer, but they have real relationships and they have real very strong business acumen, so they'll be able to guide and help, especially if you're reaching out into international markets, where they'll be able to understand what the different investors in those different countries are going to be expecting. Then I've seen a lot of people go out and just put their raise on social media. I don't really think that works too much. Then there is obviously your crowdfunding platforms. I do not know, excuse my ignorance on this, I do not know if there are a lot of crowdfunding platforms available to you in Nigeria. And it's a little bit horses for courses. The great successes on crowdfunding platforms are essentially nice consumer products. If you're doing anything outside of that, it's incredibly difficult to raise on a crowdfunding platform, essentially because the audience won't understand, doesn't have the understanding of those products outside of your e-commerce consumer products. And really the sort of investors that you're seeing on there are very sympathetic, where they will understand the problem because they're living the problem immediately. So there is room within there for that, for using those crowdfunding. But again, it's assessing your business at a higher level to make sure it's actually a fit for you. And then of course, where you're involved with passion, and incubators and accelerators are absolutely a great source of building yourself out, putting the proper processes and documentation that's required to go out, and obviously connected with a certain amount of people in their network as well, which is obviously the way that they can help you through that. Just to sort of give you an idea of what we do at N2, and I'd like to big shout out and a big thank you to everybody that did register on the platform. I'm very grateful for that, and I hope that we can help you going forward. So what we really identified, and what I've kind of been alluding to through this whole conversation, is this primary outreach. We're trying to take it into a digital world. Coming from a background of being an investor and being a fundraiser and being a founder, I understood that actually there are a dozen questions that need to be asked by both sides to qualify them. And this can be done digitally. We sat there and we went through, spoke with a bunch of investors and just asked them what those real salient points were, what those real questions are that you need before you even want to entertain looking at a pitch deck. What are those points? And we mirrored that on the other side. So founders ask the questions, and we run an algorithm in the middle. And essentially that matches the right investors with the right founders. We've built a very simple process to give the founders the ability to reach out to those investors, the right ones. And as I said earlier, every single one of those investors, and we've got about 650 now, have been qualified by us. So we know they have capital. We know that we've got their live investment thesis on the platform. So founders are being matched to very accurate first-party data points, not things that we've scraped from all over the place, which makes it incredibly fast to reach out and connect with those investors. Some of the connections that we've made have been incredibly fast. We had a Series A medtech from Singapore that was on a phone call within the hour with a corporate venture capital company out of Germany. Just something that would never happen without the use of a very fast algorithm and a bit of tech that actually does the matching for founders and investors. So we're getting a lot of success. We're getting a lot of connectivity happening incredibly quickly. We've got a few new launches coming up because essentially it's a very large step from all the tools that are being offered to what N2 is providing as a very large step in the middle. So we've built a couple of new tools to help investors and help founders, where you can list yourself. If you're coming up for a live fundraise, you can list yourself. You can be viewed by not only the investors that we've qualified, but by the traffic that we get. So it's a bit of a sort of directory service. And also on there, you can view the investor database that we're putting out, which will go live in the next couple of weeks. So you'll be able to see which investors are on there, who's qualified. And if you wish to reach out to them, you can go ahead and do that. Or you can press our little magic match button, and you will be matched instantaneously to the right investors. And then the last thing we're launching in the next couple of weeks, the next thing we're launching is anonymous reviews. We get a lot of stories from founders, and sometimes they just want to vent, but sometimes there's a lot of credible and really interesting information. Our mission is really to accelerate this whole process and to help founders and startups within that process. And there's a lot of information held by founders about their experience with different investors. So what we're putting onto the platform is a questionnaire where you can actually go in and anonymously rank and speak about your experience with different investors. It's a little bit of an ask in terms of please pay it forward so that the next founder that comes along can read that review and get an understanding of your experience with that investor to guide him into maybe not even calling that investor, or how he should go forward with that conversation. So I'm actually going to put the link in the chat. If, as I said, we're just starting this off, so we're trying to garner up these reviews. So if anybody has had any experience with investors and would like to leave a review, it's anonymous, as I said, so you won't get any you won't get any kickback from anybody, but it'd be incredibly helpful for everybody in the ecosystem. And that's it. That's pretty much all I've got to say. If anybody's got any questions, happy to have a bit of a Q&A.
So the session is open now for questions. If anyone would like to ask Derek any question, you can kindly unmute yourself and ask away. Or you could
Hi, Derek.
Okay, John.
Hi, John.
Hi, Derek. Thanks for a great session. Unfortunately, I had to be kind of like in and out, so I missed certain parts of the session. So I will throw the first question just to confirm. I mean, you may have spoken about it during your talk, if your service is a paid service. And then the second question is around reviews. One of the things we also know is that a lot of times people write reviews that are subjective. And so
Absolutely.
you want to be sure that you're carrying, credible reviews if you're introducing reviews. So how have you thought that through? What are you looking at in terms of making sure that you're getting credible reviews on your platform? Thank you, Derek.
Okay, great questions. First question. The part of the platform that's free is the Startup Scout. So you can put your opportunity on there, which can be viewed and is shown as a live opportunity on there, and that can be viewed. The matching is also free, so you can actually upload your whole deal and see how many investors would be matched to your deal. To distribute your deal, it costs $800 to distribute it, and you have a live dashboard where you can see exactly who it's been distributed to and exactly what they're doing, if they clicked on it, if they've read your pitch deck. And we've given investors tools that they can, if they like your deal, they can reach out to you and connect with you immediately and start a conversation. So that's the way we've done it, and we've got a deal with Passion as well, so that you can get a discounted rate through Passion on this. Does that answer your question clearly enough?
Yes, to a large extent. If I understand it correctly, I can be on there for free, but for you to actively distribute my deal, I have to pay $800.
$800, that's right.
Yeah. And so if I had investors I'm already talking to, but I wanted them to have the opportunity of your platform to view me instead of doing emails back and forth and all of that.
Yeah.
Can I drive my own traffic to your platform?
You can steer them to it. Yes, you can.
Fantastic. Thank you so much.
Very good. Now the second part, which that word subjective is absolutely spot on, John. And one of the big things that we've done with this questionnaire is to make it as objective. This is, we explained clearly at the beginning of this review process. This isn't about your gripes and I didn't like him because he said X, Y, Z. This is about qualifying the process. We don't actually care what the end result is. It doesn't matter if you didn't raise or you did raise. But what we don't want is founders coming on with a massive gripe about an investor because they didn't raise. What we're trying to get here is if the investor ghosted you for a month, now that's a valid point, and other founders need to know that. If he didn't invest in you, that's down to your business and down to his thesis, right, and his view. But all the points along that journey is what we're trying to really understand and qualify to rank it all the way through. Misbehavior is really what we're trying to identify here. People saying things and not acting on it. People giving lip service, not following through. People saying, if we invest, you get X, Y, Z. And as we very well know, there's a lot of investors that say they have all of these special tools and special relationships they're going to share that never actually happen. And this is really, really, really what we want to start reporting on and reviewing on, so that every founder can actually see a score very quickly and understand what the reality is. I hope that answers that for you.
Thank you so much.
Great.
Okay. Hi, Derek. So I have a couple of questions here. So Thaddeus Anyanwu says, please can I get the right investor to fund my business in energy and agribusiness? I'm not so clear on how he spelled it here, but it says I'm so there of getting the needed fund to actualize my dream to create employment for all. So basically he's asking if the platform is open to different sectors aside from tech-related startups. So basically, in summary.
Yeah, very good. There's a couple of points on this. The platform is essentially just for tech-related businesses. It has to be powered by technology, but we do medtech and biotech as well. What we don't do is real assets. So we don't do real estate development, for example. But every single industry is represented on there. So if it's energy, but it's supply chain, bit of technology, then that is obviously something that can go onto the platform. If it's an AI or 3D printing for different industries, for the automotive industry, that can all be on there. But everything that is on there is really all about IR4. It's all Industrial Revolution 4. We're really looking at technology being the driver of every single opportunity that's on there, and changing every single industry as we currently know it. So that's how N2 has been built. And to be honest, they're the investors on there. So if it's actually an opportunity outside of that, there won't be any investors on there. Saying that, there's been an awful lot of green tech, agri-tech companies coming through on the platform, and in fact it's a little bit like the biotech market in terms of it is technology. It's just not technology, written in code. It's different types of technology, and they also work on the platform. And to add on to that, and maybe to a follow-on answer to John's previous question, one of the things, if you use the platform, is that you have your instantaneous matched list that you can reach out to. But for as long as the duration of your fundraise, we are continually matching you to new investors that we bring onto the platform. And currently we're sort of growing at about just shy of 5% a week. So there's a lot of new investors joining the platform on a weekly basis that you will be continually matched to and have access to new investors. I hope that answers the question.
Okay, Derek, I personally have a question. Okay, so basically I would like to know how startups you have basically mentioned the sectors which N2 will focus on, right? So how about for startups that are in, let's say, prop tech, startups in let me say still in the agri sector, right? But not totally agri-related. It's a hybrid between agriculture and let's say food processing. So I have a lot of questions coming in from the agri sector. So I'm just trying to pin them down and know how they can leverage N2.
Okay, so for real assets, N2 isn't sort of SME, should I say? It's not an SME fundraising platform. I can give you an example of an agri-tech opportunity that was on the platform that did really, really well. And basically they'd built hardware. It was a hardware opportunity. for basically the harvesting of fruit and not wasting any of the byproducts of that fruit. And they also had a whole distribution chain behind that. And that was something where they'd actually built the technology in order to make the harvesting of the fruit and usage of fruit way more efficient than is currently available in the market. So that's something that could sit on the platform. But if it's a pure, we need money to distribute, and we want to sell XYZ hard product to a wholesaler in a different location, that's not something that the funders, the investors on our platform are currently looking at. That's a different type of investor. So does that make sense? Patrick?
So I'm with you, Derek. I still have one question though.
Please.
That's popping up in the chat box here. So I think this person is from Zimbabwe, right? So he says, for high quality fresh fruit export, right, from Zimbabwe to the UK and EU, we look for venture capital. Can the platform help?
Yeah, this is for funding something like this. Great example. I mean, we just touched on this for doing this sort of distribution and looking for capital to help build the distribution line, so cover the cost of building that out. There is no real technology in here, so it's not something that the investors on the platform would be looking at. That's a different type of investors. So it really is, a technology-driven investor base on there. Looking, maybe if I explain it this way, the way that we match this, these opportunities, and the investors that we have, we're looking at sort of the splitting out the technology drivers into 4 sections. One is business models. Because obviously in the last 10 or 15 years, they've changed dramatically from the old business models to today's business models, such as B2B, B2C, etc. So this is one area where that upload, you put in the new world business model, if you like. Then we have the technology that you're using and building your business on. So, whether it be AI, machine learning, 3D printing, etc. That's another section. So that type of technology you're using, and then it's the domain. So if you're a regtech, insurtech, fintech, e-commerce platform, where you fall into the sort of domain industry side. And we've just started bringing in a whole bunch of organizational and cultural matching section as well. So whether you're a first-time founder, a serial founder, a female founder, etc., because we're seeing that there's quite a few. There are an enormous amount of mandates out there looking for different types of things. Especially being based in the Middle East. We have investors that can only invest in Sharia compliant opportunities. So that's something that has to go in there as well. So that's how we're looking at the world at N2, and that's how we are matching to the investors that we have on the platform.
Okay. So Derek, so a lot of the startups here are asking questions as regards your email and how they could put forward their pitch deck.
How they can put forward their pitch deck. Yeah, I would. I would encourage all of them. I believe, Patrick, you have the website and just freely upload your opportunity, put your pitch deck on there, and you will sit on there if your opportunity is live. investors can come and see it. There's a great inbound resource for startup founders to use to get visibility on their transaction.
Okay, great. So for absence of no more questions, anyone like to still share his or her question? For none, I would just have to say, Derek, thank you very much for joining this session. And we are actually looking forward to continuing more conversations on how we could help startups, Nigeria and Africa and globally, basically, access venture capital. Derek, we're looking forward to more conversation and more partnership with you on behalf of Passion Incubator, Horborn by FCMB. We say it's been wonderful, and we're looking forward to more sessions like this with you again, Derek. Thank you very much.
Fantastic.
I would just open the session for any other contributions, so we could end the session. Okay. All right. So Derek.
Yes, sir.
Okay.
Well, a massive thank you to everyone from my side. It was an absolute pleasure. And I look forward to working with you again. I'm working with all the founders that were present today. And feel free to reach out to N2 if you have any questions. We're always trying to help. It's the mission of the company is to help founders as much as we possibly can. That's what we're about. So once again, Patrick, massive thank you to you for inviting me today. It's been a real pleasure.
Awesome.
Thank you, Derek. Once more, just to appreciate you for joining in. Do enjoy the rest of your day. Thanks.
And you. We'll speak again. All the best to you all. Bye-bye now.